Hi, I'm Smiley Miley. I retired at 45 and now I travel the world. I'm financially independent and my time is my own. I invest successfully in the stock market wherever I am and enjoy my life to the full. If you want to improve your financial future and become financially independent, then learn how to invest in the stock market right here. You've got this. Welcome to my channel. My aim is to build a platform of knowledge so you can be comfortable investing in the stock market. I'm going to show you how to get started, what strategies to use. I've got stock picking tips and when to buy and when to sell. In addition, there's informative videos, expert advice, interviews with fellow investors of all ages. We enter the world of investing psychology, and there's an in-depth look at my portfolio and the decisions I make. But before we get into all that, let me introduce you to the team. First up, Warren Buffett. Using the Intelligent Investor book as his Bible, Buffett has built an investment portfolio of over $750 billion over the years using a very simple strategy. His motto, whether it's socks or stocks, I like to buy quality goods at a knockdown price. Let's hear what he has to say about investing.
This is not, what we do is not a complicated business. It's got to be a disciplined business, but it does not require a super high IQ or anything of the sort.
Well, I'm liking the sound of that. Who else have we got? Next up, but by no means least, Peter Lynch. He turned a $100 million fund into a $9 billion fund in 13 years, and he wrote the best-selling book, One Up on Wall Street. It's the best book I have read so far. Buy a copy today. His famous quote is, "Selling your winners and holding your losers is like cutting your flowers and watering your weeds."
We begin with Peter Lynch. Time magazine has called him America's #1 money manager.
In 13 years, he drove Magellan to a 2,800% gain. Quite simply, Lynch has been recognized as one of the greatest money managers ever.
Whenever he speaks, I'm listening. Now, why did I set this channel up? Well, I want to create a group of like-minded individuals interested in making their money work as hard as it can to create a better life for themselves. I'm not here to sign you up to expensive training courses or sell you any books. I truly believe everyone from students to doctors and lawyers should be actively investing in the stock market because it's not that difficult to do. Here's Pete again.
In the decade of the 80s, there's 8,000 investment clubs. These are amateur, sort of average people just investing. These investment clubs, 62% of these clubs beat the market. In the decade of the 80s, only 25% of professionals beat the market.
62% of individuals like you and me beat the market in the 80s. You can do this. Every new topic you learn is daunting to begin with, and investing in the stock market is no different. This series of 10 to 15 minute videos will build your knowledge and confidence so you can profit from what the stock market has to offer. Let's get straight into it and give you your first key takeaway. What is a takeaway? A takeaway is a key rule that forms the basis of your learning and understanding of what you are trying to achieve during your investing lifetime. Key takeaway number 1. The sole purpose of investing is to beat the bank. If you can't beat the bank, leave your money in the bank. If you can beat the bank, your money shouldn't be in the bank. And using a very simple strategy, you can easily beat the bank investing in the stock market. So, the stock market. How do you get started and what do you need to know? Do I need degrees in corporate management or business studies? What do I need to know to be a successful investor? What are your aims and goals? Do you want to build a capital base, earn extra income? Is it just a hobby? And what resources will I need to start investing in the stock market? You'll be pleased to know that you do not, I repeat, do not need university degrees in corporate or business finance. You do not need to be a fully qualified accountant. What you do need is an inquisitive mind. You need to be able to read simple numbers, and you need the stomach, the temperament for investing, which is very important. So what knowledge do you need? Well, you need to understand how the stock market works and you need to know a little bit about companies and how they work. And you need to have a strategy. Do you want to boost your income? Do you want to build a capital base? Do you want to retire early? Or simply, do you want to get rich? And finally, what resources do you need? You will need a laptop, access to the internet, 3 websites you need to look at, a research, a watch list, and an online broker account. And the all-important thing, you need some money to start with. Right, let's talk a little bit about the stock market. It's not that scary, honest. The stock market is just like any other market. It is a regulated place for you to go to buy shares in any publicly listed company. In order for a company to be listed on our exchange, and therefore have access to our money, it has to conform to certain rules and regulations. These rules and regulations are in place to protect the investor, us, from unscrupulous managements running away with our cash. So the stock market is our friend, not our enemy. Unfortunately, and I think the reason people do not invest in the stock market is because it has an unfortunate perception of being too complicated, too specialized, and far too risky. Something like this. Those people are share traders, not investors. It's a full-time job staring at screens all day shouting buy, sell, buy, sell, buy, sell. Hell no. Warren Buffett doesn't do that, Peter Lynch doesn't do that, and neither do I. All they do is speculate on the movement of the share price. That's all. They're not interested in the company and its products. They're all in competition with each other, pushing the prices up and collapsing the prices down.
So the market is one giant casino.
This channel is not about trading, it's about investing. We are investors. We want to buy good quality companies that pay a dividend. We want to buy the shares at a cheap price, and we want to keep those shares for a long time. With the right tools and strategy, looking for companies to invest in is not that difficult. It just takes discipline and a few hours a week. But before I go into how to do that, let's take a look at companies and the structure of the stock market. So what is a company? Might seem like a stupid question because we all know what a company is, but from an investment standpoint, we need to look at this from a different angle. A company is a business that started off as an idea. It is a living organism that starts small and grows and expands the more successful it becomes. It makes products and it employs people. As the company grows, so does your investment in it, which is why investing in companies is a great idea. There are 2 types of company. Private limited company is owned by private individuals and it is difficult to buy shares. A public limited company is owned by the general public. It's easy to buy shares and it is regulated by the stock market. In the UK, companies that are listed on the stock market come in 3 broad sizes. First up is the AIM index. These are startup companies, sometimes called penny stocks. In second place, there's the FTSE 250. These are established companies that have a market share but don't dominate the market. And then you have the FTSE 100, the biggest companies, well established, without much room to grow because they already dominate their market. Let's take a look at each section in a bit more detail. The AIM index, alternative index market. Startup companies, sometimes called penny stocks or long shots. Very hard to find, but in here are some future FTSE 100 behemoths and your way to riches. I've tried to make money in the AIM index, but I've barely drawn even. I now avoid these companies because they are too risky. Let's see what Peter Lynch has to say about penny stocks.
I'll switch through to my my long shots. Avoid long shots. I bought about 30 long shots in my life. I've never broken even on one. The ones that are really bad are what we call whisper stocks. And if Arthur Levitt was here, he'd appreciate these stories. But these are the times that somebody calls you up and say, "Hi, Peter. How's Carolyn? How are the kids? And I'd like to talk to you about International Blivet." And what they have in this company is very good about the earnings. Earnings going to be very, they're going to be big, small. $3, $1.
And they keep whispering, and they say, what are you talking about? I don't understand it. And these are, now either they're so surrounded by people that are going to run out and buy the stock because it's so exciting, or they think the SEC is listening in, they'll get a shorter term, they'll get 6 months in the camp rather than 2 years in the camp. But whisper stocks don't work.
The point he is trying to make is that investing in companies that are just about to explode simply doesn't work. Investing in good quality companies that are already established is the way to a better financial future over time. So if we invest in companies that have already gone through the small phase and are now well established but still have room to grow, this is where we can find some really good companies to invest in. Domino's Pizza, Aston Martin, Direct Line Insurance and Currys PC World. This is where we can start to find some great companies where our capital is protected more and they offer us income in the form of dividends. And finally, the FTSE 100 companies. Quite simply, the top 100 largest companies in the country. They command such a position in their sector that growth slows and they just collect profits, which they pass on to us as dividends. Examples are Rolls-Royce, Vodafone, Coca-Cola, BP. No introduction required, I hope. Between the FTSE 250 and the FTSE 100, there are 350 companies that provide layers of protection for our capital and dividend income returns as well. All we have to do is a little research. See it as a treasure hunt. I keep mentioning the word dividend. It pays dividends. We say it all the time. But what is a dividend? The whole point of a company is to create profits. Once a company has grown big enough, it distributes some of its profits back to the shareholders in the form of a dividend. If you reinvest the cash dividend back into the company, your capital base will grow over time, but it's also a great way to earn extra income if you need to take it out every year. So I introduced the team. I explained why I set the channel up. I gave you your first key takeaway. We've discussed the resources and skills needed. We've had an introduction to the stock market and an introduction to companies. I've explained that we don't trade, we invest. We buy good quality companies and reinvest the dividend. It's a great way to start your investing journey. Well, that's the end of video 1. I hope it was a nice, gentle introduction for you. I'll see you in video 2. Coming up in the next video, I will explain what investments you can buy in the stock market. There'll be an introduction to the 3 websites you'll need to use, and we'll discuss the difference between investing and speculating. See you then.